Hello, folks. Brandon Chapman with you. It's our Monday Theo Night video, the title of which is Markets Get Defensive Ahead of Wednesday's FOMC. Big news coming up this week. Again, potentially significantly market-making news, market-moving news, I should say, coming up Wednesday. And if you look today as the S&P finished lower, the futures at this point are down 0.88%. It certainly appears to be some reservation heading into Wednesday's announcement. Not exactly the bullish tone that many had thought about or talked about over the weekend if you're following the news cycle. As we look at the SPY, for example, this is an area where we've seen significant activity. For example, on December 8th, a large print of 1.25 million shares of 468.14. The price finished below that. As you look at the range over the last week, you'll see the low from last Thursday's session at about 466.14 and Friday's high at 470.90. As you look at those points, this could create a significant amount of movement, either positively or negatively if we do take this out. We do have a secondary level, two prints on November 30th, 2021, at 1.3 million shares of 464.84. So we might extend a little bit below that, but there's a bit of a gap before we start to find and search out some significant prints from November. As you look today in the SPY specifically, and I'm sure more stuff has popped up throughout the day. One thing I thought that was kind of interesting earlier in the session, we'll wait for it to generate here. It's taking its sweet time, is right here. This 420, 460. And you notice the 22 and the 23. So we're talking about way the heck out there, a year and 2 years. But in essence, selling the December 22 420 put and rolling up to the 460 put. That does create a significant debit of about $22. Or sorry, about about $28 rather, as they're moving up strike prices from 420 to 460. And as you look at the chart here, you see the 460 strikes about here versus the 420 that's way down here. While they're extending the time frame, again, that is a significant debit. They're rolling into a little bit lower volatility, but still at relatively higher cost. Now, again, that's not exactly forecasting a major decline in the next week, but it is emblematic of those saying, hey, we've got to reset this thing. We've got to roll up those puts that maybe were bought for a while ago to be more connected with the price in lieu of a decline. Some people might say, well, that's a hedge. Absolutely could be a hedge, but it doesn't change the dynamic of the timing of saying, hey, we got to move it up now, representing some risk perceived in the market. As you look at the VIX did search out relatively low point on Friday at about 1870. We did finish up slightly today on the VIX. As you look at the volatility of the VIX, the VVIX, you'll see that we did tick up slightly after about a week ago reaching the highs up here, 155, 160. That led to a little small rally in the market over the prior few sessions. So again, we've had a bullish week. The VIX has been pushing down. Now, as you look at the term structure of the VIX, basically 3-month volatility as a ratio of 1-month volatility. So we're doing the 3-month VIX, VIX3M, against the VIX. And you'll notice today we finished about 1.19. And on Friday, we actually finished up about 1.25 or slightly higher, meaning that the 3-month VIX is 20 to 25% higher over the last 2 trading sessions above the VIX. The market is expecting significant volatility in the future. We're talking in the coming weeks. So the big question, the elephant in the room is, are we going to see an end-of-year sell-off? Again, that's what may seem improbable. And again, I'm certainly not banking on a major correction here. But could we start to drift back down to the 455, 460 range on the SPY, back to these significant prints that we saw in late November and early December here? Absolutely. My thought process has been we'll probably finish up very similar to where we ended October as we borrowed from November and December to create that fantastic run that we saw in October. And again, everything from a volatility perspective is shaping up more for that possibility. Now, as you think about some companies that might be a driver, well, if we look at the SPY and we look at the S&P 500, the makeup of the S&P 500, again, you look at Moderna, for example, higher today. Bristol Myers Squibb, significantly higher, right? Pfizer, we're talking about drug companies higher today. Of course, news from Pfizer, picking up another company here. So you also got Baxter International here. Again, what does this company do? Makes like IVs and those types of things. So again, I mean, we're seeing medical devices, healthcare, doing relatively well today. Cerner, nice big, almost engulfing formation today, breaking out, looking at near-term opportunity, maybe about 78 here in the next days, maybe even pushing back to prior highs at 82. And so that kind of circles back to our sector performance. Healthcare doing rather well, up 0.94% today. But as you look at the sectors that are performing just slightly better, utilities, staples, and real estate, these are very interest rate sensitive parts of the market. And as you look at the TNX, for example, the TNX was lower today, about 65. And if we look at TYX, 30-year, lower by 72. And if you look at FVX, we're down about 0.39. Meaning what? The term structure or the yield curve today did flatten slightly as we saw a rally in the bond market. And again, this really is interesting given the fact that what? The Fed is likely, as they release their statement on Wednesday, they release their dot plot. They talk about their bond buying program, right? The quantitative easing that's going on. The taper in those bond purchases may be accelerated, right? There's definitely more of an increased interest and pressure to do something on inflation, which came in very, very hot last Friday at the highest rates on an annualized rate since 1982. So again, inflationary hot, there's a lot of pressure right now for the Fed to do something. And the fact of the matter is their policy is becoming increasingly less effective. And so it does open the door for them to potentially start to taper and maybe become more aggressive in terms of raising rates over the next year or two. And again, you can see this over here, ZQ, 30-day Fed funds futures, as you look at how these lines have transitioned. So again, this is October, November, December. Notice how this line is getting steeper to the downside as the market is expecting more and faster rate increases in the future. And again, we're looking down here at possibly what? A 1.5% Fed funds rate by October of 2023. They're pricing in that probability right now, 1.25% to 1.5%. So again, the market's coming to realization they do not have the Fed put underneath it. And with the rally in treasuries, they were seeing more of a defensive posturing as utilities and staples led. One of those staples that did well today is Altria. So Altria was up about 0.6%. This is a space along with Philip Morris that I've been talking about for a couple of weeks here. Philip Morris kind of getting a breakout today from a bullish flag. But in Altria, you saw today in the December, the 46 calls. So if we bring up Altria here, waiting for the data, but we look at 17 December, that's this week, but the 46 calls mostly bought. Again, looking at near-term upside here to 46 or higher. 46 also happens to be a prior resistance. But again, more of a consumer staples, more of a defensive posturing. As we look at Apple today, Apple's one of those stocks that if the market's going to go higher, it should do relatively well. Actually faded about 2% today. Now, as we look at the option activity, there's been a lot of bullish interest in Apple over the course of the last little over a week, and today was no different. As we look at the 23 December expiration, we zero in here on the 190 calls is an area that were bought today. Sorry, 205 calls. Got my dates wrong here. So it's got two of them. But anyway, 25,000 contracts, mostly bought at the 205 strike. That's a very aggressive reading on Apple here. And then we look at the 31 December expiration out here. So we go out to 31 December. And as you look at some strikes out here, we're looking at the 180, 190 long call vertical. So basically buying the 180, selling the 190. Again, that was over 60,000 contracts, so they probably added to throughout the course of the session. But again, you'll see a 180, 190 call spread. Again, looking for a 190 potential target here by the end of the year. This makes sense that if you think the market's going to rally at the end of the year, you might take some upside shots on Apple. And again, you're seeing that happening in the form of call options, limited risk, unlimited upside in terms of the long call, or a pretty reasonable upside, 10 points here on the call spread. But again, they're holding out hope of a rally in Apple that may not necessarily come. But those are some cheap ways to speculate if Apple is to rally going into the end of the year. When we think about inflation, we're talking about commodities, right? Well, today, towards the end of the session, on GDX specifically, right? So gold is one that traditionally does pretty well over the last 6 years, going into December and early January, and sometimes will extend into February. This seasonally over the last 6-7 years has been a very, very good time for gold. You'll see it's been setting up for several weeks. As we look at GDX, the chart looks pretty much the same, as we're also similar, setting up back at support, finishing slightly higher today. Going to the trade tab, you'll see that there was an upside call spread, buying the 32, selling the 34 for 31 December, expecting a rally towards the prior resistance up here in November on GDX. Another commodity stock today, Archer Daniels Midland. Again, we're talking about agricultural commodities. Of course, you can look at ADBA, for example. Ag commodities have done fairly well. As we look at ADM, rather, not ADM, ADM, not rather than AMD, Archer Daniels Midland caught a nice bounce today, finished about 1.88%. And towards the last hour, there was some bullish activity on the 7 January expiration out here, out at the $70 strike price. And again, you can look at the chart of these to see how it's moving the price simultaneously. And we'll go to 1 day, 1 minute here. See right here, occurring about 40 minutes before the close. Nice push in the price. Big volume came in. And as you look at what happened to the stock price, right about the same time, you're seeing this bigger move that was occurring here. Saw some volume come in, big push. So again, kind of driving the movement in the stock over the course of about 45 minutes before the close. So again, another bullish trade ADM, pointing to more upside here, potentially to, again, about the $70 strike price. Again, some near-term positive outlook. $70 gets you back to the prior high. So maybe we do catch, as we approach the end of this year, early next year, some movement in gold stocks and some agricultural company like ADM. And then maybe we see some Apple follow through, especially if the market does move higher moving in the end of the year. So again, you kind of got the sectors to kind of focus on. Energy did kind of fail today a little bit, along with cyclicals and technology. Again, it just doesn't look like we're going to see a lot of favorability in that space. And finally, Under Armour. So again, there's our individual dynamics with each stock that could play out well. Now for Under Armour, didn't exactly do well today, down 4%, along with weakness in Macy's, for example. I mean, Ford ripped higher and fell back today. But UAA, if the stock can hold and maybe reverse, push above maybe the midpoint of today's candle or maybe today's high, it could be one to look for. So someone took again, bullish bet on UAA for the December, the December expiration, the end of this week, shooting for upside at 24. So in essence saying, look, maybe risking about 40, 50 cents there in lieu of the stock pushing towards that $24 strike price. So you got about a 2-to-1 ratio. If we do find support there on UAA, you could look for a little directional change. Finally, a bearish trade today on Ford. Now, again, we talked about that roll up on the SPY. You're also seeing that on Ford today. So a January $17 put was sold. The February 18 put was bought. Again, why would you do that? The intent is to what? Trying to become more connected with the price. And you also saw some other activity of rolling from a December expiration at the 16. Oh, sorry, I missed the. Yeah, we'll go over that one. So anyway, the point being is we're rolling up to 18 strike again, anticipating what? We're trying to be more connected if we get more follow through. And again, we got support up here about 19-ish. So you start to break that, we could see a bigger reversal in Ford. Anyway, folks, that's all we got for today. Hope you have a great one. See you back next week on the video. Have a good one.